Today I want to talk about why I chose proprietary trading as my plan to retire early. So I was working at Lockheed Martin as a ballistic missile defense engineer, and I was making like 60 grand a year. This was around 2008, so keep in mind that that's probably like 100 grand now. Still, that's not that great, considering the complexity of the work that I'm doing. One of my best friends from college, probably the smartest guy I know, he was at Jump Trading when they had maybe 50 employees. They're kind of a household name now, but at the time they were just this weird shop that was called Jump Trading. Like, it sounded goofy, like who would want to work there? And we stayed in touch, obviously, a couple years after college to keep up on each other's careers and whatnot. And he got $1 million bonus when he was like 24 or something. Like, no exaggeration. Like, with a bachelor's degree as a futures trader. He was trading crude oil futures. And he was like my best friend, but I still was like suspecting that he was lying or something, which like is out of character for him. But I was like, $1 million? Why would they pay you that? That's bizarre. And I went to his place just to like visit Chicago and hang out. And like he had his like tax return left out, and it was like he had to pay like 88 grand in taxes because like the government, you know, I don't know if you guys know how taxes work, but they try to estimate what your next year's earnings are going to be. And so he overshot it by so much that he owed the government 88 grand. And he was just balling out, like going to all those like clubs, like underground, and like spending like 30 grand a month. He would get like Christmas cards from them, those like clubs, because he spent so much money that he was like a super VIP member. Anyways, nevertheless, I was at Lockheed Martin making my 60 grand. And I don't know, it's just like when you find out someone's making that much in another industry, it kind of makes you question like your career decisions. Like, here I am, like in the performance review, like I'm preparing for the performance review, like rehearsing my little speech in the mirror. Like, you know, my contributions and the projects that were completed over the last fiscal year exceeded, you know, I'm like rehearsing my speech to try to get my raise up to like, you know, 4% annually instead of 3%, which is like a difference of like $400 or something. And there was people in other industries making $1 million bonuses, and it just feels just like stupid. And the worst part about it is that when you give that talk about, you know, I think that I've outperformed expectations for someone of my level. After saying all that, they would say to me, oh, but you know, you have to know that we're in defense and we're the security blanket of the United States. Like, we're not here for money. We're here to like protect the country. And they give you one of these like kind of ethics speeches to kind of shame you. And I was like, okay, but I mean, I didn't say this, but I was like, how come the like executives are getting like $10 million bonuses then if like people aren't here for money? Like, you know, this doesn't really add up. It sounds like something you say to the foot soldiers to just like keep them grinding, while like the people actually in the know are here for the money. And anyways, you know, you just get a little tired of that, you know, those corporate slogans and all that. And the Christmas party was like a joke. Like they give you, I think they asked you to like bring your own food in like a brown bag, which is just cartoonish for like, you know, a Fortune 500 company. That said, I just decided, this kind of ties into my other video about like how I decided, you know what, I'm just gonna find the most efficient path to making money, and that's gonna be what's that gonna be? You know, there's like medicine. Like, my sister's a doctor, and I was like, should I do that? You know, surgeons make a lot, but the path to start making that big money, it takes like 10 years. Like, seriously, and it's not like 10 easy years. Like, medical school, a residency, like it's quite rigorous. Like, my sister was doing like 80-hour weeks, I think, 100-hour weeks. Like, she'll sleep on like a cot in like a locker room in the hospital and be on call. So she'll just get woken up at like 3 a.m. to like, you know, check someone's like pulse or something. And like, that's crazy. And then after all that, you might make like 300 or 400 grand a year or something. And there's this other path, the secretive industry of prop trading, where people like my friend are making $1 million bonuses at age 24. So I'm like, okay, it's time to chase the money. This is clearly the path I want to go down. So yeah, while Lockheed Martin was paying for my master's at UPenn, I was using the UPenn Career Service Center to apply to these hedge funds and prop trading firms. Chicago is where derivatives were founded, so options and futures, and they tend to have a lot of good ones that are known to pay big bonuses. So a lot of like the smart kids from the coast, like Stanford, Harvard, Penn, like they go to Chicago to work in this prop trading industry. And it's a secretive industry, really. Like they'll be inside like nondescript buildings and stuff. If you go to their websites, like it's very like vague what they do. And I think it's because they don't want the Bernie Sanders of the world to like be like, wait a minute, these like cocky 24-year-olds are making $1 million bonuses? That's insane. Like we need to tax that. We need to regulate that. So they try to like be very low key and like on the down low, you know, but the people in the know are in the know, you know, like at the smart schools like MIT, Harvard, like people whisper like, you know, what are the industries that pay the most, you know? And it's not Goldman Sachs and banking. That's like for people who don't know. It's these secretive prop trading firms. Yeah, like Getco, for example, because this is around 2008. Getco, which, you know, merged with Knight Capital, so it became KCG and then got acquired by Virtue. I mean, they kind of lost their luster after their first few years, but when they were like 50 to 100 employees, in 2008, they were one of the first HFT firms, and they did so well. I think they were averaging like 50 million a year, but then in 2008, when the market absolutely crashed, they made, I believe it was like 800 million or $1 billion, and they were like 50 to 100 employees. So like first year traders who've been there for like 8 months got 7-figure bonuses. Like you can look this up. This isn't like me like talking up this industry. Like go do a Google search, like open another window and look it up. There's like evidence of it. There's like people who talk about it. And I personally know people who worked there and got these bonuses. So that's a tangent. I'm like, okay, life's just about money. Money buys happiness. This is the industry to go in. And one of the best things about this industry is that you don't have to deal with people trying to like shame you like they did in defense, where they're like, we're the security blanket of the United States. This isn't about money. You know, they're just like, in the interview, they're like, we're here for money. Like, I remember they were like, I made it to like the final round interview on site, and they were like, why are we here? And it was like a panel interview, and the guy to my right or something said your typical like politically correct like BS, where he was like, we're here to add value to the markets and create liquidity. And the guy was just like, wrong. Like, what about you? Why are you here? And why are we here? And I was like, to make money. And he was like, right answer. Like, I like that. I like that they're honest about it, you know, because people are there to make money in every industry, but like they pretend they're not, which is annoying. But in prop trading, it's a little harder to pretend when you're literally just buying and selling. You're not creating a product. You're not providing I guess you could argue you're providing a service. You're providing liquidity, but for the most part, you are just getting in and out of positions, scalping. Like a ticket scalper outside of a Taylor Swift concert, but you're doing it like hundreds of times a day across different asset classes that are publicly traded. So, where was I? So, yeah, ultimately I get into this industry, and I can make more videos about my experiences in the industry. But yeah, those movies like Wolf of Wall Street, they're kind of accurate, which is insane because that's in the 80s, I think. And even now, or in the last decade or two, it is still a little bit insane, like crazy, like, you know, people doing drugs, like people like having sex on the trade floor, just like wild crap like that. And the holiday parties are insane. Like they'll invite like Katy Perry to perform. And let me tell you, all those like left-leaning celebrities who like virtue signal about the little guy, like they're all phonies. Like they all go to these private like parties by Wall Street people where they perform in front of like 300 people, and they'll be like, you know, yeah, Wall Street, like put your hands up, this is where the money's made, right? Like they're a bunch of sellouts. Yeah, you can look that up too. I don't know if that's public record, but like a lot of well-known celebrities perform for these like secretive prop trading firms, and they just pay them like $1 million for like 2 hours or 1 hour, and they're just like, sure, I'll do it. And I would too. I'm not like judging. I'm just saying that a lot of them are quite vocal about their like politics So that's where the hypocrisy comes in, right? So anyways, where was I? Yeah, this world of prop trading, it's insane. So why do I like prop trading? It's kind of like being at a startup incubator where it's not a startup because it's not wildly risky, but it's like being at an incubator because each trade desk is kind of like its own startup. And it depends on the shop you're at. But for a lot of shops, yeah, each trade desk is kind of like its own startup, and then the firm is like the startup incubator. And you have a chance to make a lot of money, and your comp will be tied to your desk. So like at my first prop trading firm, it was 20%, like commission basically. So you're sitting there and trying to, pull money out of the market. We were options market makers, and that tends to be the main strategy that those firms use, but there are other strategies. They're quite diversified at this point. But you're sitting there just grinding, pulling money out of the market, basically scalping. And it's like you don't even want to take days off from work because you're gonna get 20% commission. So if you're making 10 grand a day, you're gonna get 2 grand in bonus more from that day. And unless you can have 2 grand worth of fun by taking the day off, you can't really justify taking a day off. And so that's kind of like a golden handcuffs kind of concept, because it's hard to have 2 grand worth of fun in a day. So it's hard to justify ever taking a day off. So a lot of people just didn't leave. Like they were just there every day. I guess up around the holidays, markets can be kind of quiet. So like volume is light. So you might not make as much as you normally do. But then there's also like weird events that happen where you can suddenly make like 50 grand in a day. And if you happen to be on vacation on that day and you just miss out on that, like you're really going to beat yourself up over it. But it's kind of entrepreneurial in that you own the risk. And if you lose a lot of money and you walk in the next day and your P&L is down some stupid amount, like you're fired. Like that's it. So in that sense, it's kind of entrepreneurial. It's the same way like a startup founder owns the upside and the downside of his firm. And that's kind of exciting, right? It makes you feel emotionally invested in working there. But it also like, it'll lead to some sleepless nights, like if you get cornered into some big position and you just keep like averaging in, and then you're, what is that? And then you end up, going home with this big position on. You're in such a situation where if the market has like an unusual, like black swan type of move, not even black swan, just like a 5% move or something, like you're not gonna have a job the next day. Like, and so, well, it depends on how much of a risk taker you are, but you can end up doing that with like a 2% move. And this is gonna sound really cold, but every trader does this. Like when you're trading with someone else's money, you tend to take more risk unless they ask you to like put up capital and so you have skin in the game. And so technically the correct strategy, EV wise, is to take as much risk as you can. Because if you can get away with 1 or 2 big bonuses and then you blow out the third year, like it doesn't matter if you lost more than you made the first 2 years. You got paid out on your 20% commission on the first 2 years, and then the third year you got fired, and that's fine. You just go apply to an MBA program and pivot, or you can probably just go to another prop trading firm and just make up some bullshit about why you quote unquote things didn't end well at the last place. But I think the most important reason for why prop trading is so appealing, you make the most money when the economy is doing the worst. And that probably sounds very predatory, and in a sense it is, but most trading firms work that way. They make their money when the markets are panicking, because when the markets are panicking, pricing is inefficient. And yeah, you're basically taking money from other people who are panicking. Sorry if that sounds predatory. And when markets are calm, they're just these calm bull markets that are just grinding up. There's nothing to trade. It's like the price discovery is just efficient. It's just drifting up. And so what's basically happening when the market crashes is that someone's calling their broker, some rich person, and he's screaming at him and saying, hey man, get me out of this position. The market's going to crash. The pandemic's going to like send the S&P to 0. Just get me out at any price. And their broker's like, sir, maybe please calm down. Like markets tend to do this. Like, you know, and he's like, do you want to get fired? Get me out. I don't care at what price. So the guy's like, oh, okay, sir. Sure, we'll do. And then he'll like sell like huge block positions, like 5% lower in this like illiquid market. And so you can buy stuff if you're fast and you're a market maker and you have your markets out there, you can buy stuff like 5% lower than where it's trading instantly. And then there's another guy who's a contrarian to that guy who's like, holy crap, the market's overreacting. This is insane. Look how much it's sold off. This is going to be the low. This is a V-shaped correction. I'm going to buy the dip here. And that guy is desperately trying to buy. And he's telling his broker, like, dude, buy at any price. I don't care if it's 5% over. Buy at any price. And so as a market maker, you're selling to that guy. So these two people have opposite opinions and they're both panic trading. And as the market maker, you're buying and selling to each of them and scalping the difference and locking in the profit instantaneously. So on these highly panicky days, like when the pandemic really like materialized and stuff and the SPOOs lost like 10%, like trading firms made like more than they made in a whole year in one day. This is across the industry. It's quite common that trading firms, their profits are a function of volume and volatility. And it's a very feast or famine industry in that it's very much, it's like quite exaggerated almost. So yeah, I mean, years like that, most trading firms, people got like 4x bonuses, some 5x. So like if they tell you at the beginning of the year, you know, okay, we expect you get a 100 grand bonus this year, you're going to get a 400 grand bonus that year, or 500. And it's not just like they say that and it doesn't happen. It literally happens. Like they give you that money. It's insane. It's an insane industry. And you can't work in another industry after that because it's like someone just turned the volume down. Like, how are you going to be emotionally invested in some project when like the upside is that you might get promoted and get like a 20 grand raise, when like you're working in an industry where it's so intense that, you know, if you miss a trade over lunch, it might be like 20 or 30 grand just in your bonus alone. Like on these crazy panicky days, like I wouldn't even eat my lunch. Like a clerk would bring me a burger that I ordered through him and it would just sit on my desk and it would just slowly get cold while I'm like panicked, like, I'm gonna buy this, sell this, because it's like, there's so much opportunity that I don't give a damn about that burger. You know, like it's a crazy industry, like, and it's a lot of fun. It's really exciting. Well, insofar as like industries that make money. And yeah, I had fun with it too. Like I customized my trading sounds to be like Mario sounds. So I had like ba-ding, ba-ding, like those coin sounds every time I made a trade. I had like the fireball, like brook, brook, and I had like the brick sound whenever I was hedging my positions in the underlying futures. So like when like interns would be like getting a tour of the office and they're like walking by my like wall of screens, but on the other side they just hear like Super Mario sounds and they're like, is this guy playing video games? But then they turn the corner and see me trading and they're like, oh, he just customized his sounds. But yeah, I mean, in a sense, you are just playing a video game. It's like you're playing poker. There's usually like a handful of other market participants and you have a rough idea of who they are. And if you're good, you can kind of have an idea of what position they have on and when they're getting squeezed out of their position, and you can kind of push the market that way to make them puke. And at least in the options and futures, it's zero sum. So you're literally, it's like poker in the same way that a poker, like a 9-handed poker table is zero sum. And it's funny because like during happy hour or something, people get drinks at like series where there's like, they basically give you like double shots for every drink because it's like trading is so stressful. So it's just like a thing where they give you really hard drinks there. And you'll see like traders who, you know, trade your product, like sitting at the other side of the bar, like looking all sad. And you're like, oh yeah, I steamrolled that guy in that one trade intraday. Like, it's just a really like interesting industry. There's really nothing quite like it, honestly.